think volatility itself is overbought here? Thanks in advance. You guys have been the best forward guidance available.
You're welcome, and I appreciate the compliment. We don't get everything right, obviously. We're just on a good run here, and as Stan Druckenmiller taught all of us, when you're right, spread your wings. Because when you're right in macro, that means a lot of people are wrong. And until they get onto your side of things, you just spread them out. Get loud. Equity VIX will be overbought with a 28, 29 in front of it. Obviously, oil volatility will be overbought with something like a 70 in front of it. But the real volatility to watch here is bond market volatility. It's called the MOVE index. So get a live quote of that, put that up on your screen. Have a dashboard, okay? Like when you look at this, when you're watching me, hopefully you've tuned me out at this point because the market is open. But again, if I'm just this guy talking, which I think I am, I'm just yapping. You're doing what you're doing, right? You're trading the open. What you should have is a dashboard. Like if you were to look at my screens, I have inventory of things that I would want to buy or sell, but I have dashboards. My dashboards of volatility have every single volatility of every single major asset class that ticks. You got to look at that. It's like having not having it, put it this way, would be the equivalent of taking my headlights off in the dark. Again, I don't drive without my headlights in the dark. There's no way you're going to get me to do that. But my fear is that a lot of people are actually driving in the dark. So again, volatility is an expression of fear or anxiety. Again, it will get overbought here. Stocks will get oversold here. And by the way, the only time that doesn't hold is that when you go into an all-out stock market crash in a day. Don't forget 1987. There are lessons of days where the U.S. stock market can go down, break the circuit breaker at down 7% on the day. Now they have those, obviously, for those reasons. But I think that the time is getting closer where the dashboard is becoming more and more right by the day, where the low end of the range may not be the right place to buy anything. It may be telling you that we are indeed having one of those days where you can be down 3, 4, 5, 7% in a day in the S&P 500 as opposed to rallying off the lows.